Hey traders, welcome to the double shot. Welcome to a new week of market coverage with Elliott Wave Cafe. Let's begin by taking a look at a few charts. It is the 22nd of January. Last week, especially on Friday, we had some pretty decent breakouts across the board in kind of multiple indices in here. But today we've been kind of slowing down. So we'll take a look at that as well. But I want to start with Bitcoin in here. That's in the after hours here in the obviously overnight session, the Asian session, the European, we're starting to kind of sell off and break a bit more clearly below that 40K level. Now, I did say in one of our earlier presentation that the moment we're going to be losing 43K, chances are that we're going to have a little bit of a deeper sell-off. We've sold basically about $10,000 for the 49K that was reached at the outset of the ETF approval, and then here we are, maybe 10 days later, I would say, selling off about $10,000 from the top. Now, you can see in here that we are getting fairly close to the middle of this beautiful uptrending channel that started, back at the end of 2022. And I would expect a little bit of a support to start to come in near current levels. The move, was a kind of decent impulsive move with a large consolidation here in what now appears much better as a fourth wave, with the final thrust into the ETF approval in a wave 5 of wave 1. We're going to label that as a wave 1 for now. We'll see how it goes. So at the larger degree, you have wave 1 minor, wave 2 minor, and then that subdivides the next sequence in a wave 3 minor. It's made out of another 5 waves. That's wave 1 minute, and then you have wave 2 minute, and then you go 3, 4, and 5. So I think, as I've been saying, Bitcoin will go through a period of correction and just digestion of this entire rally, and we would assume that happens somewhat in a very simple 3-wave. The most basic form of a correction is a zigzag, so there would be a wave A in 5 waves, a wave B in 3 waves, and then another wave C in 5 waves. Now, this move from the highs in here, it's getting close to 38.2% of this entire advance. If you can look to your left in here, you will see that there is a little bit of a resistance that back in November, between, let's say, November 9th and November 28th, so almost a month of consolidation here in the smaller fourth wave before we broke out there towards 45K. So that zone will probably, along with the 38.2, at about 38K, will offer the first support. That's what I said, that's what's going to be one of my first targets on the pullback. But I think eventually, if we stop there and we get a 3-wave rally, then we would get another decline and maybe move back towards 36, 35K as these kind of couple of next months start to unfold. Now, the move from the highs here, I didn't look, kind of closely at the structure. You could say that you might have a 1, 2, 3, 4, 5, and you could have already a wave 1 and a wave 2, and you actually could be starting another 1, 2, and then break much stronger. Another argument could be that you could have a let's say a wave 1, 2, 1, 2, and then so this first move kind of completed right down here at this low, through a truncated fifth. So 1, 2, 3, 4, 5 for wave 1, then ABC in 2, and then another 1, 2, 3, 4, 5 for another wave 1, then up in 2. So you have 1, 2, 1, 2, and then it should mean acceleration lower. Either way, it doesn't look very healthy. So we'll see what happens. If for whatever reason this is some kind of an ending structure and you're going to be able to rally, I would be a seller of that either way. So for right now, there's not much to do. Again, if you're short, I would probably start to thinking about taking profits here into the 38K if we're going to get that chance. Other than that, I will continue to kind of sell rallies into right now you'll see there that this levels towards 41, maybe even 42 would be a pretty decent resistance. Right now we broke about 40,500, which kind of held several times, and we'll see if they're able to kind of climb back that. But this is just a quick coverage of Bitcoin here. Let me jump over to take a look at the rest of the markets. So that's just kind of my outlook there. Let's jump and see. Let me go to my other platform here. And I'm going to start with Dow Jones. Again, we had a little bit of a mislabeled in here, and that's just the nature of the beast, right? Because we broke above these levels. I thought that this probably could be a wave one, and you could get a wave two, and then start to break lower. But the market had other thoughts, moved higher instead, which tells me that we still had a fourth wave to resolve down here. Maybe the sentiment that was created up into these highs were not as strong for a fifth wave, and that was all a part of a fourth, still a consolidation sideways. And now we've done a final thrust in a wave five, almost kind of straight up. And I continue to view this as somewhat terminal, and I think that's a pretty decent indication. I mean, look at the RSI as well. With the move that's making new highs in here, I have a lot of trouble believing that this would be the beginning of a next big advance in here. If anything, we're going to go sideways or sell lower. So I continue to beat that drum, right? That beat. I will stay true to my conviction here on what I think the market structure is telling us. Just because we moved higher, it doesn't mean that the market did a whole lot of things, right? It didn't do much. It basically consolidated sideways, made a small move higher. I'm not going to get derailed by this. So, this is not me fighting the market. It's just me looking at this and accepting the fact that, let's say, my labeling was, incorrect in here for a little bit, but it doesn't mean that the whole move in here, it's not correct. So I will stay true to that and wait patiently for a resolve lower. We'll see if the market continues to grind and push and laugh in my face. We'll take a look then. But for now, that's kind of my stance here in a wave 1, 2, a 3, and this 3 you can probably move it here as well. I don't have a problem. And then do a fourth, and then a final wave 5. Let me just measure that third wave. Just slightly above 161.8. Okay. So I'll be waiting to see if one wants to, let's say, wait. I will be ready to open some more Dow short positions tomorrow, and maybe I'll use options. Maybe I'll just go straight down, by shorting Dow, by shorting DIA or something. But if one wants to wait, more of an official way, it is for a break of this fourth wave, or for a 5-wave move into a wave A, and then short a B wave rally and try to trade a C wave low. My conviction here is pretty high, so I will start to kind of initiate sort of position already. But we'll to kind of each his own in terms of kind of risk tolerance. So that's my view on the Dow, and the S&P also has pushed higher. You could see in here I've relabeled this once again. This whole move in here has been kind of messing with my head in terms of kind of where to place this wave 1, and these internals here are just a bit wacky, even a bit wackier than what this was, because this was all of a mess as well into this rally, right? And we took a good part into this as we were kind of being long, from the spring there into the summer. But this one back here, it's still a bit off. This fourth wave could be pushed there, and then you could look at the 1, 2, maybe 3, 4, and 5. So maybe there's still a leg or two to go in here. But again, I think based on kind of what I'm seeing in here, in the way the strength is of the market, I think we're running into borrowed time. So I will continue to expect a correction in here. Now the problem is, the higher you go, you know, the shallower this correction necessarily becomes, right? So if you were expecting a move towards 4,400, you know, as a certain percentage of this advance, you know, right now you got to kind of temper those expectations and say, well, maybe you're not going to correct all the way down there because you're already starting from higher levels. So that's something that we'll have to kind of look into once we start to move. But again, a move back below this fourth wave would be something that I would be watching above this 47.14 swing low, and this is, or 48.18, that's the new all-time highs. We'll see how we will react. And it's the same story on the Nasdaq. And the Nasdaq in here, you can see, I think I have a weekly chart. And where are you? I don't think it's, let me see. So we'll just delete this for a second right there. But oh, there it is. Okay, I was looking for the channel and I didn't know where it was, but basically I only have it displayed on the weekly charts, not on the daily, because sometimes it kind of has a tendency to kind of get skewed or you know, move kind of out of focus when I drill down to smaller time frames. But anyway, I mean, to me, this is the larger wave, right? That's the third wave, and you know, I said this numerous times. Even though I do have a couple of alternates, this continue to fit the best because it's the 38.2 retracement of this rally. If that is true, however, this, you know, somewhat extended, it seems, you know, at the lower rate of ascent in here, because every move it's kind of smaller and smaller. I think we're in a fifth wave here, and you know, if we're at this degree for, or you know, I'm missing, and I need to start 1, 2, 3, 4, 5, and this is a wave 1 that moves here instead, and you're beginning a wave 2, right? This wave 1 moves there, and then you start to do an ABC. Either way, it's something that I think it's coming in, and you know, here we are towards the bottom of this, the middle line of this trend line again. Just like in Bitcoin to the downside, this happens to the upside. So you know, be careful up here. I totally am. Today in the Nasdaq 100 was the was a very strong day, and you had, I think, 37. If I got to recheck my data, but I'm seeing in the number of new highs versus new lows, there's 37 new highs out of 100, right? So you're looking at 37% increase in the number of new highs into the Nasdaq 100, levels that we haven't seen, I think, in more than 10 years in the number of stocks making new highs in the same day. So almost it feels like, you know, a too strong, too fast, you know, a too bullish type of a move, almost like a blow off, and we're going to get into a period of setback in here. Now, how much we'll pull back, we'll see, but my first levels here are 16,100, you know, and then, you know, possibly a break below this blue line as we're kind of correcting this advance. So again, I'm either looking for a wave 2 or a wave 4. We'll see, you know, kind of what the market will give us as we're moving along here. But that's the goal. And then Russell finally today had you know, one of the best days, you know, in quite a while. And I think my main count, this is, you know, kind of the bullish structure, but let me take you back to the working count that I have, and I think this one is the same because you have a wave 2 up into this low, so then you have a B in here in a triangle, and then you have 1, 2, 3, 4, 5 that completes a wave C with a wave 2, and then, you know, supposedly that's the next bullish move. But this is a little bit at odds with what happens in the rest of the market, because I mean, look, Russell is still, you know, a pretty decent percentage below those highs, right? So if you look back, you're about 20% still, right? The Nasdaq is making new all-time highs. The Dow is making new all-time highs. The S&P, but the small caps are still struggling. That's how hit this market had. That's how bad this market was hit, you know, during the decline. And it's been spending, you know, a huge amount of time here into a consolidation. We tried to break out, we failed back. Now, is this a fourth wave into the 38.2, and we're going to rally along with the S&P and the Nasdaq maybe pushing one high, you know, a bit higher one more time, and then once we finish the fifth wave in the Russell, then we begin correcting lower? Or it's already a wave 1, it's done, and this is just wave A or a wave W. Then you get an ABC for a wave X, a combination, and then you go down again in an ABC and you complete a wave 2 that takes a bit longer to unfold, right? So, right now I'm kind of neutral. I did talk about having a pretty good support here in previous videos because there was a combination of horizontal support, combination of fibs, and combination of a moving average, all hitting at the same level. And when you have that confluence of factors, you could get a pretty decent swing out of those moves. And here we are with the Russell moving 2% only today, and I think it was starting to react on Friday too. But so this is where we are. For right now, I'm kind of just on guard with this. You could probably get more bullish above 2000, but for me it's just kind of a wait and see. So just a quick coverage on the markets here. I sent an alert out, I think, with an Nvidia short. I think semiconductors, even though they've been having great performance in here, I think they're about to take a pause. And the cycle composite shows that Nvidia, excitement, Taiwanese semiconductors, all of those are a bit, that sentiment is a bit too frothy there. So I think that's going to have to correct. And I continue to kind of be short on Bitcoin for now, and then I'll let you know once I close those positions. I'm probably going to start shorting the Dow as well. So look for some alerts there, but that's kind of my ideas at the moment. Nothing really happening in gold. I'm not interested in China. Other market that I wanted to show you is the RSP. RSP is the equal weighted index. So while the SPY is the cap weighted, RSP has equal percentages on each of those stocks. And that's why, S&P, and that's why is that difference between kind of what's going on in the RSP and the SPY. It's just because those large stocks have been doing pretty well. Apple had a good performance. You have Nvidia, you have Google, Meta continuing to perform pretty well. They were struggling for a while, but they became, again in favor of everything else. So, but the RSP actually told a better picture. The counting here was cleaner in a 1, 2, 3, 4, 5, and I was calling for an ABC pullback. Now look, it doesn't follow exactly to the teeth, but the structure is the same. 1, 2, 3, 4, 5 in B, and then another impulse. So you have 3 waves, likely an ABC. But what do we know from complex correction? ABC forms a W, then you do an X to the prior B wave 5, and then you can do another ABC lower. So, I'm not fully convinced that this is all and we're moving higher. And if we do, I think it could be something like this. The 4th wave and the 5th wave in here one more time. That's a 4th wave from this 3rd, so you can go, let's say, even here in a wave 1, 2, 3, 4, 5, you finish a 3rd, then you do an ABC in a 4, the market says, you got this wrong, you do one more high, and then you correct. So either from here or from slightly higher, I think you're beginning a larger correction, because this, it's not enough to correct this entire advance. It's not even 23%. It's somewhere around maybe 20% in terms of a fib pullback. So again, not convinced that we're ready to start, ripping much higher in here. So especially, getting into a period of, seasonality here in February, that's pretty notoriously negative for the market overall, right? It's never a guarantee. It's never a guarantee. So we're just kind of looking at this through the odds of history. So that's all I got for today. So still cautious, still a bit more on the short side, but we'll take it one day at a time, and we'll see what the market gives us. All right, thanks for watching. Hopefully this was helpful. I'll talk to you tomorrow. Bye-bye.